Hello and welcome back to our trader training video series. On the past few videos we've been looking at what most people term as support and resistance, but the reality is it's when we have an imbalance of supply and demand. And what we're trying to do as smart traders, we're trying not to follow what the crowd is doing, and they're just looking for a point on the charts where any price might have stopped. But what we're trying to do as smart traders is we're trying to find those points on the chart where there has been a significant imbalance in supply and demand. And that imbalance is going to cause this equilibrium of buyers and sellers to become out of alignment at a dramatic extreme and then back to in alignment. So when those imbalances happen, that's when I'm interested in these levels on the chart. So what we're going to do on this video is we're going to look at some examples of how to use it in practical applications. So we're just going to, let's follow our own advice. Let's sort our Bollinger Bands. So we've got the price extreme, prices at the upper or lower band of the Bollingers. Now, I've taken the Bollingers off the charts for the moment, but simply so that we can see the price and how we're interpreting the charts. But the Bollinger Bands, they're sorted in our table column here, so we can see that we've got price at the upper or lower extreme. So over onto the chart area, I'm visually going to inspect. So all I'm looking at is, if this is the current price on the charts, all I want to do is look left across the charts. That's what I'm going to do. I'm going to look left to see what's going on, and I can see that this point on the chart here is where price has reacted previously, and price is around there now. If I continue to look left, I can see that, guess what, price has reacted here in the past previously as well. So as I continue to look left, I can see multiple examples of where price has reacted at this point. And by the looks of it, it has reacted quite confidently, quite dramatically, 1, 2, 3 times. And at minor levels, we can see that price has reacted several times. Now, I'm calling these minor levels because there's not been a major movement, but there has been quite dramatic movements in the past, both up to, as we can see here, and away from this particular level. So now I'm asking myself the question, if price has reacted quite strongly in the past at these levels that have been known to see a significant shift in supply and demand. Again, just to recap, that's where the money's changing hands. This is where the business is being done. It's like arriving at a big party and everyone's handing you a brown envelope full of cash. There's a good chance that if you turn up to the next party where all these people hang out that have got lots of money, there's a good chance that you'll get handed one of these envelopes full of cash. So I've got to ask myself, is there a high expectation that price will do something interesting at this level? And assuming that history repeats itself, is there a good indication that we might see price just kick lower by a few dollars? I mean, we've seen it happen several times in the past already, so there's a good chance that it could happen again. Again, we'll look at how to time our trades as to whether we make our decision today or we wait another day. But for the moment, our decision process is there a high degree of expectation that something interesting will happen at this point on the chart? And I've got to say yes, because history has told me several times that prices move at these levels. There's a good chance it's going to do it again. So this is definitely on my watch list. Let's take a look at another example. We're now looking at Facebook. This one's not too clear, I'm going to be honest. So a little bit of experience might come into effect here. For the level of trading that we're at in our video series, what we want to do is to look left. Now, the way that this platform tells me is this little speech bubble appears at the 12-month high. So in the last 12 months, the amount of data that we can see on the chart, this is the highest high in the last, at least in the last 12 months. So if we were to look left across the chart, there is nothing but fresh air at this point. So I honestly can't make the decision of, has this chart stopped here in the past? Because certainly in the last 12 months, it hasn't. And the type of trading that I do, I don't really want to scroll back through 3 years, 5 years, 12 years, however much data that we have. I don't want to do that because it's an ineffective use of my time. So if you're an absolute novice, I would say stay away from this chart. If you're someone who's experienced, you could use the logic that we are at a 12-month high, and it might just have a reaction because we're at a 12-month high. So there's two choices there. If you're more experienced, you can make a discretionary decision. If you're not confident to do that yet, then the decision here is move on to something else. And that's exactly what we're going to do. So next on the list, let's take a look at Starbucks. So what we have is Starbucks, and we can see that price is just here. And again, I'm looking at this, although we don't have the Bollinger Bands on the charts, we've got our stock list sorted to show the charts that are at our price extreme on the Bollinger Bands. So that's why we're looking at this chart. So now what we're doing is, again, we're just going to look left across the charts, and I want to see, has price stopped here in the past? So it might not be too clear, and I'd say it was more of a minor level, but looking left across the charts, we can certainly see that price has dropped quite dramatically at that point here. And it's done it again there. Again, only a small movements, but we can see that price has dramatically shifted a few times at this level. Now we can continue to look left. Again, if we just continue to do that and just cut through price, eventually we get to a point where we're in another situation where there's free air on the rest of the chart, free space. So I'm looking at these 2 points here. And again, this point, we can see that we've got that dramatic shift in supply and demand. We can see it very clearly there. So while it's only a small movement, I would still be looking at this and saying to myself, well, price has shifted quite dramatically, even if it's in a small way. I've got to make the same assessment because money flow has caused such a dramatic shift in the past. I've got to think, could it happen again? And the answer is always going to be yes. Yes, it could be. So this for me is one that I would watch more closely to make further decisions. So this stays on my watch list, my short list, because the visual inspection tells me that, yeah, this has stopped and it was a level of interest in the past. Let's take a look at ORCL, Oracle. Hey, we're picking a few good ones today. So again, although the Bollinger Bands aren't on this particular chart, it's in our watch list as being at a price extreme, which is why we're looking at this in the first place. So current stock prices here. So what I'm doing is I'm just going to look left across the chart and see, has price dramatically shifted here in the past? And we can see that price has gapped and dropped at this point in the past. If I continue to look left, let's try and get this a bit more accurate. If I continue to look left across the chart, what we can see is that prices have reacted here in the past. They've been certainly a level where prices have shifted and the supply and demand equilibrium has made changes. We can see that price comes down to this level, a little bit of reaction, and then this most recent push down, we can see that price drops quite dramatically. So we can see that this has certainly been a level of interest. This is where the money flow changes hands. So again, I've got to ask myself the question, is this a level of interest? Is this a point on the chart where I'd be prepared to risk my own hard-earned cash on a short-term investment opportunity? And again, the answer I've got to conclude is yes. The why is because things have happened here in the past. There have been significant changes in supply and demand. I've got to assume that something will happen again at this point. We're not ready for the what will happen or when it will happen, but where we're at in our training course, we've got to assume that something significant will happen because something significant has happened either once or several times in the past. And this is how we're using supply and demand. We're finding out where price currently is, we'll look left across the charts and we make our decision based off, has there been a significant shift in the past? And if the answer is yes, then this means that I'd be quite happy and prepared to invest my own money on a trading decision.